and we look at US dollar, Japanese yen. I mentioned last week that we had a clear sequence of measure move in this market, and this market has played to the pip. Okay, so for those who follow me know that some of the models I use several models. In fact, I use 6 models. I only typically show 2 of them, but in this specific case, the model that we used, the simple models work very, very well. And this market is a very technical market, so that happens very often. We had a 50% participation around this 101.70 here, and then the market went into the first target, 102.24, and then 102.90. And we call these levels as well. Then market has just continued higher, and look at the beauty of this. It tested the first and second target, and the second target was 105.61. The high was 52. So in reality, the second target is not to be considered tested, but and this opens up a couple of considerations here. First of all, anyway, as I mentioned, this market would need to trade the next measure move. Now, the next measure move would be the highs to highs, and that has failed. So that's not what this market is. What this market is actually trading at the moment. And this market, I believe, will not stop here. I believe that this market is eventually going to retrace all the way halfway back here. Okay, so while this was not a short, because this market is still in a sequence long, so when it's still in a sequence long, we have to be very, very careful, because the next extension can pick up price, and you find yourself in a short position that actually lasts very, very little here. This market continued lower, and I believe is going to need to test 102.82 in order to see whether there is going to be another participation. The trend following model here, it's showing support on top of this weekly 13 EMA, but this is not a strong signal. So I want to see participation from Algos and smart money, and if that happens, this market might still be in a situation where dump money will step in and will propel price higher, and that target in this case would be 106.82. So that's the opportunity. The market actually went close. Depending on how we trace this, we could consider that second target hit. Next, now this market is below 102.18. This market is going to retest the weekly longs here, the monthly longs at 170, which have been tested a number of times. If this holds, it's going to be a brand new opportunity to bring price from 102.80 into 106.80, which is 400 pips. That's a good opportunity, and that's something that I want you to consider. Mind that the resistance here, if this continues higher, the resistance is going to be around 109.34. That's the area that I'm going to consider. Okay, so there is a good opportunity here. That depends also on what the dollar index is going to do. Next, I mentioned the euro pound. The euro pound last week, I mentioned the potential for a correction that didn't happen. It doesn't mean it cannot happen, will not happen. It just didn't happen yet. When we look at the sequence of measure move here, this market is actually trading in extensions here, or at least finding support on extensions. I want a stronger signal, especially in a market which is very, very extended here. Of course, this extension could actually bring price higher, well above into the targets, which are well above current levels here at 192.44 and 94.06. If that's the case, I'm not going to risk, and I'll let this market move higher. Here is more the weakness of the pound that is pushing this price higher, rather than the strength of the euro. Obviously, in the last few days, we saw a lot of strength in the euro, but that has not been reflected in this market. So also because we saw relative strength for the pound as well. Now, I won't be happy with this kind of setup here, and so I'm still waiting. And that setup that I gave you is still valid. A retest of 86.26 within this area of dump money area long would be a great opportunity for a continuation higher in this market. That would imply that the euro continues and the pound resumes its weakness, which is not the case. The current scenario, the future scenario, the future weeks could actually be behind a correction of this market. Okay, so we still have this opportunity working. Euro dollar, as I explained before, this market has actually initially reacted to the level that we gave, 109.80, and that's good enough because he gave a risk-free trade. And this market could have continued lower, just he didn't do it because of the weakness that we saw in the dollar index. Now, this market is at another very important juncture here, but I won't get with this strength, I won't get on the bandwagon here. We need to see what happens, and actually, obviously, this market is trading dollar index weakness rather than euro strength. Dollar index weakness specifically also before the election here. So although this is a valid level where Algos would step in normally, I'll be very, very cautious, especially going towards the election here. And as you can see, for our dump money, it would be very, very strong and interested in buy this market if this market would correct. And eventually this market will correct. In fact, I can even give a level here where this market is going to correct. And in that area, there's going to be interest from bull dump money here, which is potentially going to propel this price higher. And later on, when we review the opportunity, the dollar index, we will understand a little bit better why, because there is a potential for the dollar index to continue lower. And finally, I want to review the euro versus Swiss franc, which is a trade that worked fine. I gave two targets, and the first target was hit on Tuesday, just in one day. So the trade is still on, and let's again try to rebuild the reason for this trade. This trade was below the monthly dump money area here, which pushed this price, actually rejected this price and then started pushing this price lower. And we took two trades in this market. We took a trade a couple of weeks ago, and we traded to the previous lows, and that's exactly what happened. And then the market came back, and it went to trade into both an area of dump money short as well as smart money short. So that was a good bet. The market did not just move lower right away, but it actually rallied on Monday and then on Tuesday continued lower. But participation from both this group actually was capable of pushing this price lower. So it's very important to see when these two groups are aligned. Now, what can happen next? If this market retraces a 50% into, again, so a 4-hour 50% here, into an area, and it does it slowly so that it can meet also the interest of bear money here. That could be, and there probably will be a continuation into what? Into the 50% level that was already tested back in June here. So that's the only level where smart money could start coming in to test interest, and we can test interest of smart money around this level. Okay, so this, congrats, this trade brought a target here, and is still valid for a second target. Of course, you could have taken partial profits here and then just continue trading this market on the downside. Okay, and this concludes the review of the opportunity of last week. Thanks for watching, Greg. Great trade. Thanks, Greg. Greg, I hope you took it as well. And I took my profit yesterday night, and you know it's pretty good actually. So next section, I'm going to